You know, it's easy to look at a bank's quarterly results and just, well, see a wall of numbers.
Hmm.
But sometimes, hidden in those figures, there's a really compelling story. Resilience, smart strategy, even some surprising challenges.
Absolutely.
Today, we're taking a deep dive into exactly that. The Q1 FY26 financial performance of Jammu and Kashmir Bank Ltd.
Okay.
We've got a ton of detailed info here. Investor presentations, press releases, the financial reports. Basically everything covering the quarter ending June 30th, 2025.
Right, the latest picture.
Exactly. And our mission for you, the informed listener, is to cut through the jargon, pull out the really key insights, and help you understand what these numbers actually mean for the bank's journey.
Sounds good. Let's get into it.
Okay, let's unpack this. Get ready for some pretty illuminating details about J&K Bank's recent performance. So let's jump right into the Q1 FY26 overview, because what immediately jumps out is this picture of, well, remarkable resilience.
Hmm.
We're looking at a net profit of nearly 485 crores. That's a significant 16.7% jump year on year.
Yeah, up from about 415 crores the same time last year. That's solid growth.
Definitely solid. And operating profit also saw a very healthy 13% year-on-year increase, hitting close to 673 crores.
Right.
Net interest income, NII, the core profit from lending versus deposits that grew 7% to 14 of 55 crores.
Okay, steady growth there.
Yeah, but here's where it gets really interesting. Their other income. That surged an impressive 29% year-on-year, reached 250 crores.
Wow, nearly 30%. That's quite a boost. What's driving that?
Well, that leads into the nuance, because what's fascinating here is how transparent the management is, not just about the numbers, but the context behind them.
Oh, okay. So the story behind the story.
Exactly. The MD and CEO, Amitabh Chatterjee, he acknowledged a tough situation on ground, referencing the Pahalgam terror attack and its aftermath.
Right. That would have impacted business activity, credit growth, especially into June.
Precisely.
Yeah.
He noted it affected key geographies. But despite that, the bank still managed that, nearly 17% bottom line growth we mentioned.
Which is impressive given the circumstances.
It is. But here's the real kicker. He clarified that Q1 profitability was actually, his word, subdued.
Subdued, even with 17% growth.
Yes, because of a specific one-time 87 crore impairment provision.
Ah, okay. A one-off hit. What was that related to?
It was tied to their investment in Jammu and Kashmir Grameen Bank, basically a necessary accounting step because of the amalgamation of Ellaquai Dehati Bank with J&K Grameen Bank.
Got it. So merger-related adjustment.
Exactly. So
Wow.
if you pull that out, what does that mean for their underlying performance?
Right. And this is the key point. The MD and CEO stated that excluding this single non-recurring event, the bank's profitability growth would have been, wait for it, upwards of 30% year on year.
Wow, over 30%. That's a huge difference.
It absolutely is. It really showcases the bank's extraordinary underlying strength and resilience, wouldn't you say?
No question. It completely reframes that 17% figure.
And this one-time event, it also impacted their return on assets, ROA, and return on equity, ROE, for the quarter, made them look lower than they otherwise would have been.
Right, understandable. And what about the net interest margin, the IN?
NIM for Q1 FY26 stood at 3.72%. The MD did clarify that the slight dip from the previous quarter, Q4 FY25, was influenced by repo rate cuts from the regulator. So external factors at play there.
Okay.
Plus, on a positive note, their cost-to-income ratio actually improved year on year, dropped to 60.78%. It's a good sign of efficiency.
Definitely. It really makes you wonder, though, how often do we just glance at headline numbers and miss these critical details that, like you said, completely change the narrative?
All the time. You really have to dig deeper.
That's a powerful point. Shows you need to peel back the layers. So speaking of layers, let's peel back another one. Let's look at the core engines, deposits and loans. What's the momentum there?
Absolutely. So looking at core banking metrics, the bank shows pretty robust business growth overall. Deposits increased a solid 12% year on year. That brings them to roughly 148,500 crores.
12% growth in deposits, that's strong.
Right.
And loans, advances.
Yeah, advances, yeah. They grew over 6% year on year, reaching more than 101,200 crores.
Okay.
And their CASA ratio, the current account, savings account deposits, the cheaper funds for a bank that stood at a healthy 45.71% as of June 30th. So strong fundamentals.
Seems like it. And what about the types of loans they're giving out? Is there a particular focus area? Are they shifting strategy?
Great question. As of June 30th this year, their loan book is definitely leaning more towards retail, the mix. Retail loans make up 70.2%. Corporate is at 29.8%.
So a bit more retail focused than
Yeah,
before.
just slightly. It's a noticeable shift compared to a year ago when retail was about 68.7%. And the bank is really emphasizing its focus on MSMEs, micro, small, medium enterprises, and also the agriculture segment, vital for the local economies,
Right, playing to their strengths in the region. So what does this all mean for their broader strategy then? Are they just doubling down on their home turf, or are they looking beyond?
Well, it's actually a dual strategy, which I find pretty fascinating.
Oh. Huh.
The MD and CEO specifically highlighted a long-term plan to diversify and really scale up their rest of India operations.
Okay.
So outside J&K Ladakh,
Okay, expanding nationally. What does that involve?
things like opening more branches in strategic business centers across the country, getting into partnerships with builders, strengthening ties with direct selling agents, DSAs, to source more loans.
Right, getting their footprint out there.
Exactly. But, and this is key, they're not abandoning their roots. There's still a continued, very deep focus on strengthening relationships in their core geographies
How are they doing that?
by lending to agriculture, local industry, and really focusing on supporting youth entrepreneurship in the region.
That's quite clear then. Building on that strong home foundation while strategically reaching for new growth elsewhere in India. Okay, now, when we talk about a bank's health, asset quality, that's absolutely critical. How is J&K Bank doing there?
Yeah, you connect this to the bigger picture, right? Strong asset quality, good capital buffers.
Yeah,
They're crucial for stability, especially for absorbing any economic shocks.
for sure.
And J&K Bank has shown, well, significant improvements here. Their gross non-performing assets, GNPA, basically the loans going bad, they reduced that by 41 basis points year on year.
41 basis points. Remind us what that means in percentage terms.
Right, so 1 basis point is 1/100%. So it's a 0.41 percentage point reduction. That brings their GNP down to 3.50%, which is down from 3.91% a year ago.
Okay, so that's definitely a positive trend. What about after they've set aside money for those bad loans, the net figure?
Right, the net non-performing assets,
Yeah.
NPA, that stood at 0.82%. Now, that's a tiny increase from the previous quarter, but still very much within healthy limits.
Okay, and their coverage. How well are they prepared for losses?
Their provision coverage ratio, PCR, which tells you how much they've set aside, remained really robust, over 90%. Specifically 90.09%. That's a very strong
Yeah,
indicator.
percent coverage is strong.
Very. And they're not stopping there. The MD and CEO announced a forward-looking goal, bring GNPA down to around 3% by the end of this current financial year.
Ambitious target. How?
Through, prudent lending, strong recovery efforts, and proactive monitoring,
Mhm.
using early warning systems, digital tools, the works.
Makes sense.
And one more point here, they actually hold an additional provision, 135 crores over and above what the RBI norms require for substandard and doubtful accounts.
So being extra cautious.
Exactly. Demonstrates a conservative, proactive approach to asset quality.
It sounds like they're really shoring up that foundation. And on the capital front, are they strong enough to support this growth and handle any future bumps?
Very strong, yeah. Their capital adequacy ratio, CIR, that measure of financial strength, capital versus risk, stood at 15.98%.
And how does that compare?
That's a year-on-year improvement, up from 15.07%. It provides a really comfortable buffer for future growth.
Good cushion then.
Definitely. The MD and CEO confirmed the bank is well capitalized. And interestingly, they have board approval to raise more capital if needed, to fund growth plans, seize opportunities.
So they're positioned for expansion.
It's clear they're not just reacting, but strategically planning ahead.
That's a comprehensive look at the financials, but, beyond the balance sheet, how are they operating day to day? What's their physical footprint like, and what about this move into digital?
Right, and this level of detail on operations, digital, governance, it gives you that comprehensive view beyond just the numbers, doesn't it?
It does.
It really reflects their commitment to efficiency and stakeholder trust. So operationally, they have a huge network, 1019 branches.
Wow. Mostly in J&K.
Yeah, significant concentration, 841 branches in J&K, 37 in Ladakh, but also 141 branches spread across 20 other states and union territories, plus over 1,400 ATMs.
Big physical presence. But you mentioned digital.
The digital transformation is truly remarkable. Get this. A staggering 94.02% of all transactions in Q1 FY26 were digital.
94%. That's huge.
Isn't it? shows massive adoption. And they've seen huge growth in users, too. 1.3 lakh credit card users, over 25 lakh debit card users, and nearly 94 lakh UPI users.
That leap in digital is clearly paying off then. Okay, and what about leadership and governance? Who's steering the ship and how well are they doing it?
Well, the bank's professionally managed. Experienced senior team, diverse board of directors, IAS officers, veteran bankers, CAs, IT specialists. A good mix.
Okay.
And importantly for you, the listener, something that really stood out from their disclosures, they reviewed several past capital raises preferential issues, QIPs from 2017 to 2023, totaling substantial amounts, like 750 crores just in FY 23-24.
Right. And
they found no deviation or variation in how those funds were used compared to the stated objectives.
meaning they used the money exactly as they said they would.
Precisely. For meeting growing business speeds, maintaining capital adequacy, that speaks volumes about sound financial stewardship and accountability,
Absolutely. That transparency is crucial for investor confidence. Anything else notable? Awards? Regulatory stuff?
Yeah, a few things. They've picked up multiple awards lately. Best MSME Bank, Private Sector, Best Innovation in Digital Lending, several for cybersecurity. So recognition is there.
Good signs.
On the regulatory side, it's also important to note they did receive some minor penalties from regulators like the RBI and BSE, totaling around 30-odd lakhs.
Okay, for what kinds of things?
Issues like currency chest non-compliance, some ATM cash-outs, NPCI non-compliance, a delayed submission, things like that. Relatively minor in the grand scheme.
Got it. And investor feedback.
During Q1, they received 8 investor complaints. And crucially, all 8 were resolved. 0 complaints pending at the end of the quarter. That indicates pretty strong customer service and responsiveness.
Good to hear. So, wrapping this up, we've navigated this deep dive into J&K Bank, started seeing robust profit growth, strong deposit and loan momentum, improving asset quality. Then we uncovered that crucial one-time impairment, which, once you understand it, really puts the bank's underlying resilience, that 30% plus potential growth, into perspective.
Exactly. And from its deep roots, being a pillar in J&K and Ladakh, to this strategic expansion across India, the bank's clearly charting an ambitious course, driven by digital innovation and those core banking strengths.
Definitely. And as we finish, here's a final thought for you listening. Given J&K Bank's really unique position, it's both this crucial regional economic anchor and an expanding national player. How might that strategic focus on specific segments like agriculture, MSMEs, youth entrepreneurship, combine with its powerful digital drive? How might that influence its competitive edge and its long-term societal impact in India's evolving banking landscape?
That's interesting. What new opportunities or new challenges will this kind of dual identity bring for them in the coming quarters?
To think about.